Assalamu alaikum. I am Muhammad Tarikul, student of Banking and Insurance of University of Rajshahi. Today I will discuss about the last monetary policy for the fiscal year 2022-23 by the Central Bank of Bangladesh. Basically, monetary policy of Bangladesh is primarily managed by Bangladesh Bank. The main goals are to achieve and maintain price stability, promote economic growth and development, and ensure the overall stability of the economy to achieve these goals. The Bangladesh Bank uses several tools, including setting interest rate, open market operation, and reserve requirements. Firstly, I will provide summary of the monetary policy. The monetary policy statement for the fiscal year 2022-23 by the central bank outlines the monetary policy stands designed to support the government's the policies and program for the faster inclusive economic growth and poverty reduction while maintaining the stability. Key highlights. Projected loan. The private sector loan growth is projected at 14.10%, a significant reduction from the previous policy. Contractionary recovery. The policy is contractionary, aiming to control inflation and manage balance of payment instability and economic recovery. Despite global economic changes, Bangladesh's economy rebounded strongly from the COVID-19 pandemic, achieving a real GDP growth rate of 7.25% for fiscal year 2022-23. Inflation control. Measures are in place to control inflation, which has been a challenge to global energy and commodity price surges. Secondly, I will describe significant changes of monetary policy from last year. Inflation control. Measures are in place to control inflation, which has been a challenge to global energy and commodity prices surges. Secondly, I will discuss about the significant changes of monetary policy from the last year. Firstly, the interest rate adjustment. Secondly, the efforts to contain inflation, foreign exchanges and reserve requirement, inflation targeting and monetary policy framework, and the last, policy to encourage remittance and exports. Summary of the key changes. Interest rate hikes. The central bank raised the repo rate multiple times in fiscal year 2023. The most significant tightening indicate to curb inflation. Second, currently depreciation. The Bangladeshi Taka experienced significant depreciation, leading to more flexible changes exchange rate management. Thirdly, inflation control. Bangladesh Bank prioritized inflation targeting, adjusting liquidity and monetary tools to stabilize prices. Fourthly, foreign exchange reserves. The central bank implemented import restrictions, introduced a dual exchange rate system, and increased remittance incentives to manage reserves. And fifth, continued support for key factors. While tightening policy, the central bank ensured liquidity support for sectors crucial for economic growth, such as agriculture and exports. Thirdly, I will talk about the tools used by Bangladesh Bank to operate financial system. First, monetary policy tools. Second, foreign exchange and currency management tools. And thirdly, regulatory and supervisory tools. Development and refinery programs. And the last is inflation targeting and money supply management. And the last, from my understanding, how I will suggest the policy needed to be reformed. First, exchange rate policy, the interest rate caps, monetary policy framework, banking sector supervision and regulation, non-performing loan management, development of financial market, etc. Thank you so much everyone for listening me attentively. Bye bye.